Penny Stock Analysis is glad to be back for another video education lesson here on stocks. So let's get started from pennystockanalysis.com. Today's lesson is a departure from our typical technical analysis sessions, which are very important to understand to determine the status of a stock, and differ from some of the ratios and fundamental analysis that we have analyzed over the last couple of weeks. And today's lesson is about your mind frame. So before getting anywhere near a fundamental analysis of a stock and even the charts for technical analysis, it's important for an investor to be in the right frame of mind. So with that, this session is about be chilled, be focused, be aware. When you decide to invest money and become an investor for yourself, it's very important to be chilled. In other words, be relaxed and be open to accepting new realities and facts and thinking about them with an open mind and new tools and analyzing them with the utmost clear of mind. So with that, here are a few things to keep in mind to keep yourself chilled, in other words, in the moment and able to make good decisions. First, pick an amount of money that you can afford to invest, or looked at in another way, the amount of money you can afford to lose. So if it's $10,000 and you don't have a problem losing that, in other words, if it went to zero on a bad decision, you shouldn't feel bad about it. That was your money that you chose to invest because you can afford it and you were willing to risk it all. That's the best way to go in because you come in from a position of power, not a fear of losing. Second, look for longer term investments and avoid day trading. It's been proven time and time again that longer term investors are much more successful than day trading investors. Many of the richest people in the world have long-term investments. Third, don't watch your stock every minute of every day. All this does is it breeds anxiety, and there's no need for that. If you picked a good company, they'll still be around the next day and the next year and for 10 years and 20 years after that. Even if the stock market collapsed today, Coke would still be around 10, 20, 30 years from now. So that's why you got to pick a very solid investment and invest from a position of power, not fear. That's why you want to choose the amount of money you can afford to lose. Look for a long-term investment. That way you're not worrying about your money every day, and that will make you not watch it every day. So invest from power, not from fear. Now once you're in the right frame of mind, now it's time to be focused and understand exactly what you want to invest in. So one of the great things that we've learned from investors of the past is invest in things that you know, that you understand, and that you encounter regularly. For us here, and me personally, I'm always in contact with technology, whether it's computer processors, voice over IP, cell phone makers. Those are things I encounter regularly, so I understand how they work. And now it's about finding a company that's on the leading edge of that technology and people who are growing their revenues easily in that technology. Why? Because you understand it, you use it every day, and you can see the mood of other people who are using that technology beside you. Maybe you understand doors, or corkboard, or asbestos for fireproofing buildings. Whatever the case is, pick something that you know. If you're a teacher, maybe it's Blackboard, right? There's a stock, I think it's BBB. Invest in what you know. Use a framework and guidelines and rules for your investments. You want to reduce the emotion. When you introduce emotion into investing, it will often kill you. And that's also why you want to invest the right amount of money, one that you can afford to lose, and why you don't want to watch your stock every day. So this all helps to be chilled and be focused. Reducing emotion doesn't mean reducing your gut feeling. Your gut feeling is right, but that's not from emotion. Pick the value at which you want to invest in and stick with it. If a stock is currently trading at $100, but you feel that it's a good buy at $70, wait for it. And even if it goes to $150, before it goes down to 70, don't worry about it. There's unlimited opportunities. And understand why the stock went to 150, and maybe it's time to reassess, maybe you valued the company wrong. Fourth, know how much money you want to make on each investment. Otherwise, you'll never have a selling point. So you never know when it's time to get out comfortably for you. Understand if it's 10%, 15%, 7%, right? It all depends on how long term you want to be, whether it's 1 year, 6 months, 2 months, 5 years. Know how much money you want to make every year. Some stocks provide dividends. Some of those are 7 and 5% every year. There's nothing wrong with making 5% compound interest. So know how much you want to make on each investment. The third leg in this tripod of theory that we're talking about right now, these 3 pillars of investing, your mind frame. Be chilled, be focused, be aware. Why be aware? How is this different from the other two? Here's why. Because those other two get you very involved in a situation. In other words, you're sitting back, diving in, and now you have to be aware of what's happening. So sometimes that involves stepping a little farther out from the situation. So remember that example where we've seen a $100 stock and we're only willing to buy it at $70 and then it skyrockets up to $150? Don't feel guilty that you missed an opportunity. You just have to forget about it. Learn what happened, assess the situation, learn from it, and move on. Okay, and the reason you want to do that is because there's unlimited investment opportunities. Unlimited. There's always going to be the company pushing the boundaries, changing their industries, reaping profits. This is why you have to invest in things you understand, because you'll be the first person to know exactly which company is succeeding and which company to invest in those fields, and that's how you make long-term gains. Second, keep learning. It's inevitable that you will encounter new things in your life that will spark your interest and so forth. So learn about them. And that may even open up a new avenue for you to invest in. You know what's come up recently? Hybrids and batteries and electric power. Those are new things that everyone has to learn about. And fourth, it's okay to not understand something and avoid it, no matter how much hype there is. Many investors are staying away from Google because they don't understand fully how that part of the economy works, how that industry works. And that's fine. If you don't understand it, stay away from it. Believe me, for everything that you know and understand and use every day in your life, there's a company that makes it that's public. And that will provide more than enough opportunities every day for the rest of your life to invest in. You know, now that we know how to be chilled, be focused, and be aware, this brings us to the conclusion of today's video session. Now, these may seem like common sense things to you, but just slow down and look around you once in a while, whether it's in the store or in your car, and you'll see pretty quickly that a lot of people are devoid of this seemingly common sense. And the reason is they're not listening to other people who have made money, who are in this industry, to understand how things are working. That's why you have to be aware. Part of being aware is being open-minded, and that's why it's a very important third leg in this tripod of investment pillars. The reason you should get the right mindset. So remember, you can rewatch this on our YouTube channel. You can check out our website, pennystockyanalysis.com, and rewatch this until it's ingrained in your head and you have the right mind frame to become a successful investor. So from Penny Stock Analysis and pennystockyanalysis.com, invest wisely.